First of all, thank you, Naventus, for inviting Storebrand to this event. My name is Nader Hakimi Fard, and I am a portfolio manager for Storebrand Renewable Energy Fund. And I am a member of Team Solutions at Storebrand, which is, I will come back to what we mean with solutions and solution companies. But the team's focus is on investing in companies that provide solutions across 4 key themes: renewable energy, smart cities, circular economy, and equal opportunities. More specifically, as I said, I manage our Storebrand Renewable Energy Fund, and for this presentation, I will briefly discuss why renewable energy is important, how it's being deployed globally, whether the current deployment is sufficient, and our investment strategy to gain exposure to the sector. But first, let's take a look back. In 2023, the journey for renewable energy faced its fair share of challenges. As shown by the downward sloping chart of S&P Global Clean Energy Index, the ride was bumpy. Here's what contributed to the turbulence. Component prices were affected by inflation. Rising costs put pressure on the renewable sector. Financing costs, both for project developers and end customers, were impacted by interest rates. And the cost of borrowing played a significant role. Unfortunately, policy responses were slow and uncertain. This has led to the valuation of the sector coming down considerably. Currently, it's trading closely in line with the broader global market, but it remains substantially below World Growth Index. Now, while we don't anticipate that the sector will go back to its peak levels seen on the graph here, there are promising opportunities. Global policy continues to drive these opportunities, and for the long-term investor, we believe that this provides a favorable landscape. Now, as a portfolio manager for a renewable energy fund, you may not be surprised, but let's go back to the 3 key questions that we started with. Why is renewable energy deployment important? Electrifying power, heat, and transport sector is crucial for lowering emissions. But to maximize this benefit, the electrification must rely on renewable energy sources. And leading organizations stress that renewable energy is essential for achieving net zero emissions by 2050. On the graph here, you can see the electricity generation from 2 different scenarios provided by Bloomberg New Energy Finance. And currently, we are at the beginning of a massive shift towards renewables. And in these scenarios, wind and solar make up a great part of the electricity generation. But beyond wind and solar, the investing landscape includes supporting infrastructure such as grid improvements and additionally also energy efficiency, which is important. This leads us to the question on how the deployment is going. And now, according to the International Energy Agency, renewable energy capacity increased by 50% last year. And this is the 22nd year in a row that renewable capacity addition set a new record. China's renewable electricity capacity growth triples the next 5 years, but the transition is also accelerating in the US and the European Union. Policies like the Inflation Reduction Act and country-level incentives are driving this progress. These efforts are aligned with decarbonization and energy security targets. Which brings us to the final question: is the deployment enough? To explore this question, at the COP28 conference last year, governments set an ambitious goal to triple global renewable energy capacity by 2030. According to the International Energy Agency, under existing market conditions and policy, global renewable capacity will reach 7,300 gigawatts While the growth that renewables will account for almost all newly added power capacity worldwide, it falls short of the tripling goal. The trajectory suggests that global capacity will increase 2.5 times. But according to the International Energy Agency, an accelerated case forecast predicts that global cumulative capacity will more than double. And this puts us on track to meet the tripling pledge, which is also in line with the IEA's vision for net zero emissions by 2050. In summary, while it's been a challenging time for renewable energy, the energy transition is a multi-decade investment theme, and we're just getting started. Now, there's different ways that you can gain exposure to this sector. And let's go back to what we mean with solutions and solution companies. We at Storebrand will rely on UN's Global Goals for Sustainable Development to qualify what is a solution company. These goals were created by the UN members and provide a shared framework for us to work by. The companies we include in our investment universe must contribute to solving one or more of the UN sustainability goals. We believe that this is a solid starting point, as these companies can potentially benefit from the capital flows that goes towards achieving these goals. Storebrand Renewable Energy is a thematic equity fund with a clear objective: to invest in companies that deliver services in energy production, energy distribution, and energy storage. And within these 3 categories, my colleagues and I look for companies that have sustainable technologies, services, and solutions. This concludes my presentation. And if you want to learn more, please go to our webpage, and I recommend you to read our comprehensive white paper on renewable energy. Thank you, and I hope that you enjoy the rest of the seminar.